Did you really think Wall Street was going to let you get rich? They didn't crash crypto to destroy it. They crashed it to steal it from you.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, anti-money laundering, tax avoidance. If I was the government, I'd close it down.
Most importantly, what I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world, how much people are trying to move currencies from one place to another.
You think you're smart. You watched the news. You saw the crypto exchanges collapse, the billionaires go to prison in handcuffs, and the massive headlines calling Bitcoin a giant Ponzi scheme. You looked at your traditional 401k, your index funds, your savings account, and you smiled. You thought, thank God I didn't fall for that scam. Thank God my money is safe with the adults in the room. But what if I told you that your feeling of safety is exactly what they planned? What if the entire spectacular collapse of the crypto industry wasn't an accident, but a demolition? A controlled explosion designed to scare you away, to make you drop your digital assets out of pure terror. Why? So that the real monsters could buy them for pennies on the dollar. Right now, while you are celebrating avoiding the crypto casino, the biggest financial titans on the planet, companies like BlackRock, JP Morgan, and Fidelity, are quietly executing the largest land grab in the history of human wealth. They aren't trying to destroy the future of money. They are building a fence around it, and they are locking you out. In the next few minutes, you are going to discover how Wall Street used the media, the US government, and your own fear to orchestrate a silent coup. By the end of this video, you won't just realize that you missed the boat. You'll realize they are sinking your ship. Welcome to the Great Wall Street Crypto Grab. You've been played. To pull off a magic trick, you need a distraction. In 2021, the financial establishment had a massive problem. A parallel financial system was being built outside of their control. Kids in hoodies were building decentralized banks, and normal people were earning 10%, 15% yields without ever stepping foot inside a Chase or Bank of America branch. Wall Street was losing its monopoly on money. They needed a way to kill the revolution. Enter the useful idiots. You know their names. Sam Bankman-Fried of FTX, Do Kwon of Terra Luna, Alex Mashinsky of Celsius. The media painted these guys as evil masterminds. But in the grand chessboard of global finance, they were just pawns. Their greed and incompetence provided the perfect excuse for Wall Street to strike. When FTX collapsed, wiping out $8 billion of customer funds, the traditional bankers didn't panic. They cheered. They went on CNBC and declared crypto a toxic wasteland. Jamie Dimon, the CEO of JP Morgan, called Bitcoin a pet rock and a fraud. They told you to run for your life, and you did. Retail investors dumped their crypto at massive losses. The blood was in the streets. But here is the foreshadowing you missed. In Wall Street, when there is blood in the streets, the sharks start feeding. Meet Larry Fink, CEO of BlackRock, the man who manages $10 trillion. He owns a piece of everything you interact with. For years, Fink called Bitcoin an index of money laundering. He told the world it was dirty money. But then a miraculous conversion happened. While you were terrified to touch crypto, BlackRock quietly filed for a spot Bitcoin ETF. Suddenly, Larry Fink was on national television calling Bitcoin digital gold. Why the sudden change of heart? Because they finally figured out how to package it, control it, and charge you fees for it. This is the Trojan horse. They didn't want you holding your own crypto in your own digital wallet where they can't track it or tax it. They want you to buy their ETF. They want you to ask them for permission to access the digital economy. They take the underlying asset, put it in a vault they control, and sell you a paper receipt. They turned a decentralized revolution into a Wall Street product. And the saddest part, normal people rushed to buy it. The BlackRock Bitcoin ETF became the fastest growing ETF in financial history. The trap snapped shut and the victims thanked them for it. But to complete the takeover, Wall Street needed muscle. They needed someone to clear out the competition. They needed a bouncer. And they got one. The U.S. Securities and Exchange Commission, SEC, led by Gary Gensler. Under the guise of protecting the consumer, the U.S. government launched what insiders call Operation Choke Point 2.0. The goal wasn't to regulate crypto. The goal was to suffocate the native crypto companies. They sued Binance. They sued Coinbase. They sent Wells notices to decentralized software developers. They terrified banks into dropping crypto startups as clients. If you were a small tech company trying to build the future of finance, the US government treated you like a cartel. But, and this is the administrative fraud that should terrify you, while the SEC was suing the crypto natives out of existence, they were rolling out the red carpet for the legacy banks. While they told you crypto was illegal, JP Morgan was building its own blockchain called Onyx. While they sued Coinbase, traditional mega banks were given the green light to build their own digital asset custody services. The regulation was never about protecting you. It was about protecting them. They cleared the room of the pioneers so the empire could move in and claim the territory. Now we reach the end game, and this is where it gets deeply personal. This isn't just about Bitcoin anymore. This is about tokenization. Wall Street's ultimate goal is to put every single asset on Earth onto a blockchain that they control. Real estate, stocks, bonds, your car title, your digital identity. Everything will become a token. Larry Fink has openly stated that the next generation of markets is the tokenization of all assets. Why is this a threat? Because if BlackRock and JP Morgan own the underlying infrastructure of the tokenized world, you will own nothing. You will not own your house. You will own a fractional token of a house managed by a Wall Street smart contract. You won't have cash. You will have a central bank digital currency, CBDC, or a bank-issued stablecoin. And here is the terrifying reality of programmable money. If your money is a token on their network, they can program it to expire. They can program it to only be spent on certain items. If your social credit score drops, or you say the wrong thing online, your wallet doesn't just get frozen. The smart contract simply deletes your access to society. They used the chaos of the crypto crash to build the perfect digital prison, and they are painting it to look like an upgrade. You were told to stay away. You were told it was a scam. And while you listen to the talking heads on TV, the greatest wealth transfer in human history happened right under your nose. The institutions are no longer fighting crypto. They are becoming it. They are absorbing the technology, centralizing the power, and preparing to rent it back to you for the rest of your life. The window for you to step outside this system is closing faster than you think. The era of the retail investor getting rich off crypto is being aggressively murdered by the very people who tell you they are keeping you safe. So the next time you look at your traditional bank account and you feel that warm sense of security, ask yourself, are you really safe? Or are you just comfortably waiting in the pen while the wolves decide what to do with you? The future of money has already been bought. The only question left is, what are you going to do about it?